Hi, this is Mark with Right Line Trading. This is our evening newsletter. Starting with this disclaimer, that all signals and trading opportunities that we provide are for educational demonstration purposes only. Everyone should understand that trading the markets involves a substantial risk and a person loses a substantial amount of money. Always carefully consider your financial position prior to trading and never risk more than you can afford to lose. Now, in our options portfolio, in which we have approximately 15 to 16 open positions, we have been doing exceedingly well by avoiding risk. In the huge move down off it on the Nasdaq, we were completely walled off by sticking with financials, energy, and some select additional stocks that had tremendous relative strength. But now I think it's time to move into tech. Now Thursday and Friday could be wobbly days after these two tremendous up days. But I think that of all the stocks ripe for a reversal, it's really neck and neck between Facebook and Square. Uh, the market is a forward-looking instrument, and even though Facebook really massacred earnings, and has not positioned itself well with the loss of 1 million participants, you have to believe it has tremendous potential that buyers are going to look at going out into the future. But I still think the payment processors have all fallen in unison. A lot of them in sympathy with PayPal, which wound up losing, I think, about 4.2 million accounts with the additional requirement that each account have a social security number, so that the government can monitor who's moving money where. So I think Square, which you can see, is put in a tremendously powerful move to the downside. I mean, we could have gotten in right here and ridden this stock all the way down. Has really put in a bottom right here. Hit, hit, hit. It's almost a quadruple bottom. And it's moved off the bottom today and moved up quite a bit. I'm going to check real quickly. I have it on my watch list. Square moved up 11% today, $11.71. So Facebook moved up 5%. So I really think we're in a good position to take it. Now, I wouldn't want to take it on a vertical spread. I think it's a little too expensive just to buy a call position. So it would really be, I would find it a little bit more advantageous to take it on a diagonal. And what I would recommend to do is to buy the May 140s. Now we're going out a significant period of time, but we're looking for $30 of upside, which is right to here. Actually a little bit lower, and sell the 150 call. That'll reduce the cost basis by a significant amount of money. It costs about $7 to purchase the call, $3 to sell it. To sell the call, or we're going to get $3 for selling the call. That'll make the position. It'll cost us $400 for one long diagonal call. I think the risk to reward here is exceedingly good. We have tremendous upside, and if we look at all of the technicals on it, the cost basis is 400, and our maximum profit is 1,300 and $66. Really an inordinately awesome risk to reward. To risk 400 to make almost 1400 is just a stellar risk to reward. I think it's worth taking. My only concern is that Square builds traction going out into the spring and pops a little too fast for us and goes right through our 150 call that we sold. But like I said, I think it's worth taking the risk. So I would look to take the long diagonal call. I would buy the May 140, sell the April 150 for the cost of 400. Upside potential is almost $1,400. Everyone have a great evening, and I look forward to talking with you tomorrow.